Ira Epstein with your financial market wrap-up, and this wrap-up is for Tuesday evening, the 29th of March, 2022, just after 7 p.m. I will tell you, can't wait for this month to get behind us. Volatility over the top. I have done this now 53 years. I have been through flash crashes. I have been through what we call big finger trading, when you get those sticky fingers on a keyboard and people do something crazy and the market goes nuts. But day after day of this volatility is something I have never seen. Now, the market is doing the Fed's job for it in terms of raising interest rates. If you look today, the 2- and 10-year inverted for a brief while. We had yesterday another inversion, another part of the curve yield. So those things are taking place, which means to me that when the Fed does make its move, and that's a ways down here, we got a little while before the next meeting, the market will have done a lot of the work for it. It might be you buy the rumor, you sell the fact, because the Fed could go 50 points. Bank of Canada tonight, you're hearing talk that they might go 50 points at their upcoming meeting as well, as they have the inflation fight. We then go to Ukraine, and how do you keep up with all the information? You wake up in the morning and you don't know what to expect via the time difference, 6-7 hours, depending where peace talks like today went on in Turkey, and what comes out of it, and then the interpretation of the press, which is often wrong. You know, simply put, Russia's been getting itself bogged down and its butt kicked as it tries to take over Kyiv. They thought it'd be a cakewalk, they'd be in it. That didn't happen. On the other hand, we've always said they have an artillery, and they own, to a degree, the skies. They don't even need to do that. They have cruise missiles and others, and they can level what they want. They didn't turn that on Kyiv, all right? The city is still standing. Let's flip gears and look at Mariupol. There's nothing left. But the goal has been, in part, to open a corridor between Mariupol and Crimea, and maybe they take that whole swath of land. So, from what I'm reading with military people, they're saying, hey, let's redeploy our soldiers and make sure we get that corridor, and then we'll decide the next step. We take that in America, or the press took it, how's that, to mean, Russia's not going to continue the bombardment of Kyiv and another city, and they're going to turn their attention elsewhere. That's a good move for peace. Is it? I have my doubts. This is a wild man in Putin. When we had the Minsk Accord, it came after he destroyed the Ukrainian army at that point. I don't know that he's fighting an army more than he's fighting civilians today. I'm not sure what he's fighting, because I've never seen civilians all pick up arms. I mean, this is something to be proud of. And they really are fighting off the red wave. That's the way to call it. So it's been amazing. However, Russia is gathering more land. Will they get what they want? What are they going to extract? It's not on the Ukraine timetable any of this is going to happen. It's all on the Russian timetable. Okay. But as traders, we wake up, and how do you deal with it? If you're a trader in wheat, you were down nearly 80 cents first thing in the morning. I'm watching it going, oh my gosh. I knew what happened right away if that's down. If there's a peace talk, you're going to take down crude. It was down about $7. You were down in the wheat. I knew that gold dead, and it did. It went down under 1,900. Silver got smashed over $1 an ounce. Copper held up, and it should. That's one of those metals that, hey, if we're going to rebuild, if the world's going to be good, you need copper in everything. Okay. Dollar got smashed, and foreign currencies moved up dramatically. If you think you can play which day of the week you're going to get good news on a peace talk, bad news that it's not going to quite go that way, enjoy yourself. It is difficult. So, we look at the S&P, and it roared on the news. You're up nearly 2% for the week. We're now going into Wednesday trade. These are the old highs. I didn't think the market would go up there. I've said that over and over. I thought the market would have trouble at the 18-day average, and it's now through that by 100 points. So it got through it pretty darn easy. When you look at the chart, is it extended? Oh, it's like a rubber band. You keep pulling on price, it'll take very little to get a reaction bigger than you think when it corrects. And it will correct. Everything corrects. Nothing grows to the sky. The trend is up, higher lows, higher highs. The market is over the 18-day average, but this is not a bullish chart setup. You have the shortest term average under the markets, then you have the longest term, the 200, and then you have the 18. To flip the market on its butt, in other words, flip it around, this 18-day average has to get over the other two. Then you've got a bullish setup again in the market. I didn't think it was going this high. I didn't think it was going to take out these highs. I still don't. But I'm stubborn. And I'm not telling clients to go short, not even inferring it. What I think and what I read on the charts, you have to have that Jekyll, Hyde, and a neutral zone. You have to have three parts to your personality to be a trader. Are you an investor, not a trader? Can't mix the two. You can't take a bad trade and say, I'll just keep that as an investment. What did you put it on to do? Then you have to decide when should you be neutral in a market regardless of what the chart says. Maybe you don't want to trade this volatility. I'm in that camp right now pretty much. Okay, higher lows, higher highs, Bollinger Band, it can reach for that. That's 46.98. Support on breaks, the 100-day and the 200. Should you take out this number right back here, the game will change, 44, 44, 75. Chartists will look at that and say, okay, this was a nice rally in a bigger picture. Is it really mean that much because it didn't take out those highs? Take out those highs, you got to go back to the drawing board. Slow stochastics, one of my favorite tools. They're bullish. So that means to me that if you understand how to work with enhanced Bollinger Bands, which, by the way, if you take your cursor and you move it up here, you can get right to the page that teaches you how to work with this and how I work with it. As long as the red line's not under 79 on a closing basis, I think the traders are buying. There's a caveat. It's taught in the course. I'm not going to give it to you here. In the NASDAQ, you're right into key resistance. So all the way through, if it rallied, I said this should be formidable resistance. Now that you're here, why would I say, oh, it's going to just run away? You have the embedded reading. So two of the markets are embedded. What does that also mean? I teach that when the red line closes under 79, it's nowhere near it in these markets. But when it occurs, it is a sign that the market's going to make a retracement. And when it does so, since these moving averages are above the market, I will look for wherever the 18-day average is to be the downside target at that point in time. The Dow, embedded, same thing. If it continues going, upper Bollinger Band, you're nowhere near the highs, but this has just been a phenomenal rally where the retail trader has beat the pros. The pros are looking at, we're going to get higher interest rates, we're getting inversions in curve yields. Why do I want to own stocks at that point? The retail investor is saying, it's bargain time, I'm buying the breaks. And that's what they did. And for the moment, they've certainly beat the pros. That's what I think is going on. When I get to the Russell, to me, the way I teach trading, the pros came out of the market today. This is the market I said I don't think you want to be short, and my analysis on this one, thank God, was right. Again, an embedded reading, which means on hard breaks until the red line on all four gets a close under 79, I think the pros will buy. I don't think they'll buy a shallow break. I think they'll wait for the deeper break. Not a crash, a deeper break. In the VIX, I put on this blue line to show you yesterday that this might be where the market is headed. And what did the market do today? Well, on the news that maybe there's going to be peace efforts, it broke through all these averages. So up until today, I expected that we'd get down and start finding support if it kept going down here. And I thought the pros were writing puts up there. I think they're still holding them, by the way. Market embedded on them, and I think they'll bail if and when you lose the embedded reading. It's showing no sign of it yet. In the T-bond market, you're losing at the embedded reading. If it's lost on the close of business today, if it's lost, I think that you can get more of a short covering rally, possibly up to the 18-day average of closes. This would be a signal to be out of shorts, period. In the 10-year note, you're flirting with losing it as well. Flirting is not losing it. 24 is a very different reading on the bonds than 20.55. So it's the first sign that, being short and selling into the rally is probably not the thing to do anymore. If you've got your positions on, you've taken some profits, I'm assuming, you've been looking to add, this is probably not the zone to do it. In the dollar index, you're out of a trend and you're just doing this. You're drifting. This is the type of trade that the market's doing. Porpoising, if you're a F1 race car fan as I am, that's what you're doing. If you look at the eurocurrency, lower low, higher high. What do you do if, and I didn't see this coming today, what I saw was if the dollar's going to porpoise, go sideways, this should too. And the news on the peace talks drove it to the upper Bollinger Band. Well, right away I'd be telling traders, that's your gift. You got to walk away from the market at that price. Again, go to up here, click, let it take you to where the enhanced Bollinger Band course is. I'll put an ad about that later as well. In the British pound, you're still in a bear trend, but you're not picking up enough momentum yet to get to 129.97. It can. The trend is down, lower highs, lower lows. The bias is down and momentum is down. In Bitcoin, you're back into the key resistance of the 100-day average in green in the upper band, but there's something important here. If you take a look, you're not embedded. Day one of embedding was yesterday. You didn't embed. You embedded the first number. You need 3 days in a row today, maybe tomorrow. Be careful. You're overbought. Brent versus May crude oil. So 8.25 was too high. You've pulled back in the battlegrounds again, the 18-day average at a differential of 6. Now, it doesn't look like a lot. Please understand what you're dealing with here. This market was 123.70 from the trade of today, Tuesday, back up 4 days ago. It lost $20 a barrel. And I realize a lot of traders will say, what an opportunity, and they're right. But opportunity to make money or opportunity to get killed, I don't know which one of the two, all right? Got experience with this. This is wild to trade. You better have a lot of money because each day when this market moves, if you're trading full-size contracts, $7 a day. If you look at today's, here's where you closed last night, Monday, at 112.48. Today's low was 104.98. It's almost a $7.5, $8 break. At $7,500 on a full-size contract. Got to trade the small contracts for most people, but that's the kind of moves. This is not normal. If you think this is what commodity trading is about, wrong. This is not what it's about. This is now pros trying to manage risk more than anything else. I am writing a paper for my company on risk right now that I'm turning in tomorrow, just to give you an idea how that works. Higher high, lower low. We'll see what the market does. It's fighting there. Same thing in WTI that just came from 116 to 98.44 today. $18 drop, like that. It's big money if you're wrong. It's great if you're right, but to catch this move, you had to fight the market. You had to sell above the 18-day average, which is something I'd never teach to do, and then you're buying under it to catch these moves. Let the other people do that. I'd rather walk away. It's tried and proven. That is not the good technique that I've ever seen. Heating oil, lower low, higher high, flat momentum, same swings you're getting in everything else. And nat gas, got a problem in nat gas and Dodge. Day one of embedding. Day two, watch this, you don't embed. So you have an overbought market that is now in a correction process. How deep could it get back to the $5 level is really the question. It can't embed now because it lost that opportunity. As I said, you've got to look at embedded readings. You've got to learn how to work with them when they come into what we call the gorilla glue trade, where they just lock on them, and how they break away and what happens with momentum. Here's how you learn about it. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.